Respected Chief Vigilance Commissioner Sri J.M. Garg, distinguished participants, executive directors, CEOs, chief general managers, and other senior officials from banks, observers participating in this program. For the first time, we have also invited officials from the urban cooperative banks and also the NBFCs who are also equally affected by the fraud. Speakers from Ernst & Young, other resource persons, colleagues from Reserve Bank of India and friends. I extend a very warm welcome to our CVC, who has kindly consented to deliver the keynote address in this seminar and also interact with us. I extend a very warm welcome to all the participants for this seminar of importance. Frauds is a major area of concern due to opening up of the banking network in a big way in India, huge growth in the balance sheet, and particularly the advances portfolio in the last 1 decade. The risk in banking has also increased because of the opening up of the technology, whether it is mobile, internet banking, remote access, new products, outsourcing, new business models, process failure, and of course, the involvement of the employees, and of course, the external people in a big way. There is an urgent need for synchronizing anti-fraud efforts in the banking system. Today, in most of the banks, different channels and different products, frauds are handled by different divisions. For example, credit card is handled separately, housing loan frauds, similarly ATM and related frauds, internet banking frauds, loan frauds, liability frauds, each of them are handled differently. This is affecting the integrated approach, and I'll urge that banks, like many banks which have done in recent times, should integrate the fraud monitoring for effective and cost reduction purposes. There is also need for sharing the pattern among the industry players. At present, of course, Reserve Bank do circulate the modus operandi to the banks, but pattern is slightly different from modus operandi. The purpose of the sharing of pattern is that the patterns are immediately copied and circulated. So before the pattern is implemented or extended by the fraudster, if this pattern can be studied and shared with the banks can stop many of the frauds happening. In fact, CAFRAL, being a research institute, proposes to take up this work in consultation with the Reserve Bank of India and share this work with the banking system once we get approval from the Reserve Bank of India, which we will pursue. Fraud risk is a business risk and operation risk. It will affect capital adequacy in a big way if it is not mitigated. Need of the hour, therefore, is risk-based dynamic fraud management. Similarly, integrated predictive modeling and analytics is the need of the hour. It is possible today with large data and analytics to identify a fraudster before he commits fraud or prevent him from committing fraud. Already, many private sector banks are using this predictive modeling and data. Some banks in India are already using, and I will urge that more and more banks should use this predictive modeling, and also the financial institutions and NBFCs, so that the fraudster can be prevented at the application stage itself. It is possible today, technology is available. Now I will come to the main focus of the seminar. Most of the time you are going to devote in this seminar on loan-related fraud, which is the biggest challenge for all the regulators and, of course, the stakeholders. Advanced frauds are increasing. It is happening in gold and diamond accounts. It is happening in trading account. It is happening in manufacturing account. It is also happening in a big way in printing and media, and so on and so forth. What is very, very disturbing is it is being committed with impunity. There is no fear of law. Value of frauds are large. Earlier, I'm in the supervision regulation for almost 30 years. Earlier, the frauds used to be very small, few hundred crores, except, of course, the so-called scams of 92 and subsequently in 2001. But today, most of the loans are very large, running into several thousand crores. So that is the dimension of the fraud in India. Receivable and purchase frauds, bogus stock, bills are rampant. So the issue is, which we have also discussed, is the diversion fraud. So there is a lot of debate going on within the regulators and the stakeholders, whether a short diversion of funds from short term to medium or long term, or wherever the borrower acknowledges the receipt of money, should we treat a diversion as a fraud? I think we will debate in this seminar. Misstatement of stock, bogus stock, receivables, and commodity warehouse receipt, loans against warehouse receipt is another headache. NSCL is one typical example. Even many banks also have been affected by the warehouse receipt frauds. Liability-related frauds are also on the increase, despite circulation of modus operandi by Reserve Bank periodically. Recently, there has been a major fraud involving 6 to 7 banks in the city of Mumbai, involving one education group. So despite circulation of this modus operandi, and these gangs are operating in different parts, looking at the weakness of the system, banks are not taking enough precautions. There is also, in some parts of the country, opening of accounts for converting black money into white money is rampant. Opening of new accounts should therefore be very carefully done. Although it is basically a tax evasion issue, it is a concern as part of KYC and AML. Home loan frauds are still happening, although the number of cases have come down. CERSAI is not complete, in the sense even today it is yet to be populated with the documents or mortgage registration. So fraudsters are using weak banks and taking advantage of documentation frauds even today. Good news, the documentary LC frauds have come down due to the use of SFMS managing. You must be aware that in the past, several bogus LCs were issued. Today, with the use of SFMS structured messaging system, to a greater extent, LC frauds have come down. Internal frauds involving employees are on the increase. This is a major concern for all of us. This is basically happening in manipulation of the core banking system, use of sharing of passwords, audit trails are being disabled. And this is a reputational risk for the banks, and banks have to ensure that this issue is addressed at the earliest. Use of social media for committing fraud is the new dimension. With Facebook, with so many other social media, today fraudsters are able to get information by merely enticing, talking, or acclimatizing over a period and taking information and committing frauds are on the increase. In fact, in this conference, we are not discussing e-frauds. You need separate seminar for that, but that is on the increase. It is said that when economic downturn happens, the frauds increases, and also the individual frauds also increase during the period because of unemployment, because of stress in the companies. Many companies may commit fraud. We are seeing the trend, and I predict in the next 2 years we will come to know large number of company frauds coming to the fore. Deterrence is missing in our case. In all defense, deterrence is the most important thing. Unfortunately, in the Indian system today, a fraudster knows even to get a case for a trial, it takes a decade, and by the time he is convicted, he may not be even alive. So that deterrence is not there today. So that's why more and more frauds are being committed. In the last 1 year, the regulatory agencies, CVC, Government of India, RBI, CBA are in discussion to ensure that the issues relating to frauds, particularly fixing staff accountability, completing the cases in a concerted manner. All issues are being done. I am sure with these consensus being arrived, the cases pending in my banking system would come down to a greater extent.